Hey investors, welcome to this episode of InvestU. Today we'll be doing analysis of the Hertz stock. Hertz Global Holdings Incorporated is a very popular stock for its car rentals. We know this as Hertz, Thrifty, Dollar Car Rental, and Firefly Car Rental. And they've been making a lot of news lately as a result of some debt issues they're having and some restructuring they're going to have to go through. So what I wanted to do today was to look into some key statistics to figure out if we could predict this in advance. Okay, a bit of basic stock info for Hertz. Ticker is HTZ. It's traded on the New York Stock Exchange. This analysis was performed on the 5th of May, 2020. It presently has a market cap of $456 million, a stock price of $3.21, and 142 million shares outstanding. Here are our investing rules at InvestU. I've pasted a copy of these in the show notes so you can look at them below and compare these to the Hertz statistics. Okay, diving into some key metrics for the Hertz stock. So again, the price is $3.21. There is no PE ratio because they do have negative earnings reported over the past few quarters. The earnings per share right now is minus 0.76, or relative to the stock price, negative 24%. It does not have a dividend yield. At the moment, it has a fantastic price to book of 0.32, which gives us a margin of safety of 312%, a debt to equity of 0.13, a return on equity of minus 21%, which is really concerning. The fact that as they're investing in the company, they're not seeing that return. No current ratio applicable, an EV over EBITDA of 0.398, and a correlation to the S&P 500 of 0.32. It should be noted that this does have lower correlation to Walmart and AT&T stocks. So one of the first trends I like to look at with stocks is the number of shares outstanding. And especially for Hertz here, we can see an alarming trend in recent times. So as mentioned in the previous few slides, the shares outstanding right now are 142 million. And if we look at sort of the shares outstanding over the past 10 years up until 2018, it was fairly stable around 84 million shares. But we're seeing a spike recently in 2019 and into 2020. So it looks like they are basically financing their activities through share dilution, through issuance of shares, and using that funds to help their operations. So right now, again, in 2019 to 2018, we're seeing a jump of, it goes up to 117 million and then up to 142 million. So a really steep increase in the number of shares outstanding for Hertz. So let's take a look at some trends over time. So fairly stable revenue when you look at things year over year. It's kind of hovering between the 9 billion mark. The net income, though, is very unstable. We're seeing negative net income. We're seeing some positive in some years, and this is an alarming trend. Obviously, we want to see continued growth in net income, as that's ultimately what we're hoping for, and we're just not seeing that at this point in time. So we are seeing some growth in total assets, and we do see some growth in our liabilities as well over time. But all in all, we do see some changes, I'd say, in shareholder equity when everything gets factored in, including debt. From a debt to equity perspective, we are seeing some changes over time. So we are seeing that increase. Fairly decent current ratio as well, so that does mean they do have the ability to pay off their short-term debt, at least as reported in 2019. Earnings per share, though, what we like to see here is very solid growth in this area for stocks. And as we see year over year, we're seeing some large negative numbers, some swings into some positives, some very up and down type patterns. So this is a trend that I would say is quite alarming. From a book value perspective, we are seeing, again, some swings here. Generally, we're seeing a decrease in book value over time, and that ultimately is not what we're looking for. We want to see the shareholders' equity growing over time as the company puts assets on their books. Now, in doing a comparison to peers through our stock screener, this one was a little bit tough to do because a lot of the companies that are pulling up are Uber type companies, Lyft type companies, that it's tough to do that comparison with. So I won't spend a great deal of time on this. I think the biggest competitor that Hertz has is Enterprise. And the reason why they don't show up on here is Enterprise is a private equity firm, so not a lot of information is available on their metrics. You can go on their website to take a look at it, and you can see a tiny bit about their financials to do a comparison, but really it's tough to do a comparison to its peers in its marketplace. So in attempting to do an intrinsic value calculation for Hertz, we look at the 10-year growth pattern, which really is a large decrease. So we're seeing a minus 173% for the growth pattern. We would discount this at 10%. Growth rate in perpetuity of 2%, and using the 2019 free cash flow dollars, I arrive at a value of negative $6 per share. Using a simple book value growth approach, which is available in our screener, we arrive at a value of $9.54. So somewhere between those two stocks is where we're looking. So ultimately, at a value of $3.21 and seeing the potential to have a negative value for the stock, this is a stock I would stay away from an intrinsic value perspective. So when looking at stocks, I think it's incredibly important to understand how companies make money, what their moat is, as in what's their competitive advantage relative to its peers, and how does the current situation impact its ability to generate revenue over time. And nothing's more important than digging into the annual reports and the updates. So I highly recommend people go to sec.report/ticker and then enter in your ticker after that, so /HTZ for this case, and open up those reports and start looking into it before you make any investments. And I think if you do that, especially for Hertz, you'll gain a lot of insight as to why they're feeling such a tough time at this point. So going into some positives from the annual report, so it is one of the world's largest and most recognizable rental car brands. They do have a gold rewards program that really brings in recurring revenue for people renting cars. That accounts for about 36% of their transactions. Now, this may just be a coincidence, but the vehicle rental transactions for business is also at about 36%. So I really wonder how many gold rewards program members are also business rentals. So that may help ultimately bring people back to Hertz on a regular basis, but maybe this is not their leisure type rentals that we normally where they normally see higher revenue streams. They use this Hertz fast lane approach, which is basically using biometrics to help skip the line and get you into your car right away. And same thing from a drop-off perspective. It's a very easy drop-off way of bringing your car back to the airport or back to your rental site. And they don't really have a heavy dependence on a certain brand of vehicle, which is good. So they're not reliant on a key financial structuring with GM or Ford. They do have a diversified mix of vehicles in their program. So a couple negatives to go through, and there are quite a few in this current framework. So Hertz is in a very competitive industry. They do have some market disruptors. Individuals can use Uber and Lyft to get around quite easily. So the ability to do that when on vacation or when faced with adversity, perhaps you're in a car accident and you need a way to get around town, the options are really quite endless for how to do that at this point. So it is very prone to market disruptors. It does bring in 65% of its revenue from airport locations. So as we're seeing airport traffic die down due to coronavirus, really a huge portion of the revenue stream is hit. Now, 35% of the revenue comes from off-airport locations, and the primary reason why people rent cars is generally for vacation. It's also for cases where people get into vehicle accidents and they need a backup car. For the time being, and really in both of these cases, what we have heard is individuals aren't traveling, they're not going on vacation, and from a rental car perspective, and we've heard this from the car insurance space, people are getting returns on car insurance because the volume of accidents isn't there because people aren't driving into work on a regular basis. So really both streams of revenue are probably taking big hits at this point in time. Worldwide, leisure car rentals account for over 60% of revenue. So, as mentioned, people aren't traveling as much. This is going to be taking a big hit time over time. They have highly cyclical revenue patterns, with 30% of the revenue occurring in summer months, over 55% of revenue occurring in the spring and summer, which in this time right now is going to have big impacts to their bottom line annually. Again, they are impacted by market disruptors, Uber, Lyft, potential for autonomous vehicles taking over in the future, which can decrease demand for leisure and business vehicle rental as we arrive at new locations or as we have demand in situations where we can't use our own vehicles. So getting back to the intrinsic value calculation, with a growth rate of minus 173%, discounting it at 10%, using a growth rate in perpetuity of 2%, we arrive at an intrinsic value of negative $6. And as a result of this, I would be staying away from Hertz. I think when you look at their debt that's on their books, it's not alarming, but just based on how their revenue is made with the strong dependency on airport traffic, having rent structured with airports and having to pay portions of the rental as part of that rent structures in most airports, they're really going to be taking a hit, as a lot of airline industries are at this point in time. So for the time being, I would stay away from Hertz. Again, they're issuing a lot of shares to help finance their activities. The PE ratio is not there. So when we compare this to a number of key metrics, it does not meet our investing rules, and we would not be putting Hertz into our portfolio. Thanks for tuning into this episode of InvestU. Please click subscribe below and shoot us an email at valueinvestu@gmail.com, and we'll send you a copy of our stock analysis program, which helps perform similar analysis on tickers of your choice.